Hi, everybody. This is Alan Ellman, the Blue Collar Investor. And we're creating this video now to update the weekly stock screen and watch list, or our stock report that we provide weekly to our premium members. Now, over the past 10 years, these reports have enhanced in size and content based on member feedback. So periodically, we update the video that explains and describes these reports. So this is the new video for 2018. And what we're going to do is I have the weekly stock screen and watch list from market close on November 17th, 2017. I have that pulled up on my computer screen, which is what you're looking at right now. And we're just going to scroll down page by page, and I'm going to give you an overview as to the contents of a typical weekly report. Now, starting on page 1, you could see that what we've done here is we have defined the date that the report was made, which was after market close on November 17th, 4 p.m. Eastern time. That's when my team, led by Barry Bergman, starts creating each weekly stock report. And we also list the expiration date, which in this case was December 17th. So the report date is November 17th, and the expiration date is December 17th, 2017. Now, at the top of page 1 of these reports, we give the economic information globally, not just within the United States, that transpired the previous week. Any significant economic information we publish. We also published significant economic events about to occur the following week. So that's basically the information that you see on the top part of the reports. So let me just clear that out. Now we're going to move down to the next part of the report, which is a summary of the exchange traded funds. So you could see here that the exchange traded funds that were the top performers over the last 3 months are listed with their returns, their appreciation over that time frame. So for example, LIT was up 22%, ASHR was up 11%, all beating the returns from the S&P 500. So those were the top performers, and those ETF reports are normally published on Wednesday evenings after market closes once again. We also list the select sector spiders, which are exchange traded funds that divide the S&P 500 into 10 different segments. So we list the top 3 performers, which at the time of this report were XLK, XLB, and XLE, which were up 8%, 6%, and 6% respectively. And they all beat the overall S&P 500. So for those that want to stay involved with just S&P 500 securities, you could actually be at the top 30% of the S&P 500 by utilizing these select sector spiders. Now, below that, we show securities that you're going to hardly ever use, but when you need them, they're nice to have around. And those are inverse exchange traded funds. So if, for example, the S&P 500 is going down, its inverse ETF SH is going up. So in normal to bull markets, you're never going to be using these, but in a year like 2008, boy, they sure could have come in handy because they were appreciating dramatically. We could have purchased them and sold covered calls on them and really made a lot of money. So we include those in our weekly reports with the caveat that we understand that you're barely ever going to use these. So let's now scroll down a little bit to the next part of the chart here. And what we're going to do here is have a look at the comparison of the different assessments from 3 different places. BCI, which is our market assessment, And what we do is we talk about how many out of the money and in the money calls we're doing from a percentage basis. So if I was neutral on the market, I might be doing half in the money, half out of the money. If I was bullish, I might be doing 3-to-1 out of the money to in the money. And that's just the BCI personal assessment. Doesn't make it right or wrong. Doesn't mean you should be doing the same thing. But for those interested, we let you know the positions we're taking. We also put down Investors Business Daily assessment, which at the time was confirmed uptrend. And so you could factor that in as well. And finally, Dr. Eric Wish's Gmi Index, which are technical signals that indicate the health of the overall market. He uses 6 different technical scenarios. And in this particular case, it was very bullish. All 6 were bullish. So 6 out of 6 is the best. 0 out of the 6 would be the worst. So we give that, and also the date that it turned bullish, in this particular case, August 31st. So since then to November 17th, the GMI was a bullish signal. So you can have a look at the BCI assessment, IBD assessment, and the GMI index, which is a very good indicator. We also put down the put-call ratio, which is a contrarian indicator. So when investors are bearish, the market will probably end up bullish. It's an inverse indicator. And so we give you the number. In this particular case, the number was below 1 at 0.79. And so you can make a judgment as to whether or not you want to factor that one in as well. And finally, at the bottom of page 1 of these stock reports, we chart the S&P 500 over the last 6 months and the VIX, which is the Cboe Volatility Index. Some people refer to it as the investor fear gauge. And usually the S&P 500 and the VIX are inversely related. So an uptrending S&P 500, of course, is bullish. I had a little blip in the screen over here. And a downtrending VIX is bullish. Here we had a corresponding blip when the S&P went down. Over here, you could see the VIX was going up. Then it started to work its way back down again as the S&P started to go up again. So we have a whole barrage of information here so that it will help you make an overall assessment of the market. And you know that the more bullish you are, you're going to be taking more bullish positions for your covered call writing. You'd be going out of the money, the more bullish you were, in the money, the more bearish you were. That's just a brief summary of page 1. Now, page 2 is the key to the tremendous amount of information that we have in our reports. So, for example, over here, we talk about the earnings reports, and those will appear in the gold cells. You'll see those in a moment. Stocks that appear in bold, those are the ones that are strongest technically, that passed all of our screens. We have information on beta, which is historical volatility. We have information on the rank of the industry. An A rank is top 20%. You know, we can't go through every line here, but we're going to just give you an overview to help you understand how to best utilize these reports. We scroll down a little bit more. And when it comes to information like, for example, ex-dividend dates, because that could affect early exercise. Earnings reports, if we're unsure, you may want to check with the company website, although we'll give you very, very accurate information. So 98% of the time, you don't have to do that. But if it hasn't been confirmed by the company, you may want to double check if it's around the time that that earnings report is due out. So we give you information on that. We talk about option liquidity in the form of open interest. We'll get to that. I'll show you where that's located. And so there is a tremendous amount of information in the report, and that's all summarized here On page 2 of the report, we also give you a little information about the Scouter rating, which is the risk-reward rating. And this is something you should all familiarize yourselves with before you use the report. I know it looks like a tremendous amount of information, and it is, but you will become familiar with it as you go through the information on a week-to-week basis. Okay, so let's now scroll down again. And now the next page of the report is where we actually start seeing the eligible securities for covered call writing. Now, in this blue area up on top here, those are the screens that we use to generate our eligible stocks. So the top blue bar represents fundamental, technical, and common sense screens. They're all described and detailed in my books and DVDs, but you see here, for example, the IBD screens. You'll see the risk reward screens, technical screens over here. Like here you see the exponential moving averages, 20-day and 100-day EMAs. You see the stochastic and MACD indicators over here. We'll give comments about those indicators. For example, here the MACD was moving down or bearish, but the stochastic oscillator was bullish. So we'll make a little commentary regarding the technical indicators. And these other columns here, the Scouter risk reward, which we still provide to our members, even though they're currently not available publicly. We like to see a ranking of 5 or higher. You could see some are very strong at 10, and some just made it at 6. So that gives you additional information on that. What about industries? Well, you don't want to duplicate and have too heavy a presence in one particular industry. So we will name the industry the stock is in and give you the ranking of that industry. And so that will be helpful as well. Moving over to the right side of the screen, still in the gold area, and I'll explain that in a moment. Any of the stocks that generate dividends are in this column here. So that's an annual dividend of 2%. For ADI over here. And the ones that are blank, they do not generate a dividend. Finally, very important column, and not finally actually, is the earnings report. And you'll see the ones in red have been confirmed by the company. And the ones that are listed, those are the ones that are the published, but not confirmed by the company yet. So you may want, if you're going to use those after these reports pass, and they haven't turned red, then you may want to just double check on other sites or even the company's site. Some of our members like to use weeklies. The one with the Y in this column means that weeklies are available. And over here, this column here shows you option liquidity. And what it says is near the money, open interest, more than 100 contracts. So a Y is a good thing because the liquidity is good. And if you see an N over here, at the time the report was made, that meant the liquidity was not adequate enough for covered call writing. However, we do have a lot of people that use our reports just for buying and selling stock. So then it wouldn't make a difference whether the option liquidity was greater than 100 contracts or not. Furthermore, liquidity can increase. So what we do is we tell you, hey, look, these stocks passed our screens at the time that we generated the report. Liquidity wasn't adequate, and then you could take it from there. Now, how many weeks has this stock been in our report? Because if it's just brand new, like 1 week, then it's not quite as strong as something that's been on our report for 10 weeks. So that's just another little bit of information we provide. And in the final column here, if there is a dividend, we give you the last or the upcoming ex-dividend date, which is important for those who don't want early exercise, which can happen the day prior to the ex-dividend date. So we give you that information as well. Now you notice here that all of these top stocks are in a gold field. What that means is, in this particular current contract, the December contracts, all of these report during the December contracts. So in order to use this stock, you have to wait for the report to pass. So let me just clear this up for you, and then let's start over again here. Let's take, for example, the top one, NOAH, which has a report date of November 20th. What that means is it's an eligible stock, but you can't use it until the report passes. Too risky. All right, but once the report passes, as long as no egregious information came out, that will then become an eligible stock. So we separate our contracts with these black lines here, and then below that by these broken black lines. So the first black line are the ones that report in the current month, and then after that, the contracts are broken down by the broken black lines. So these are for here, the December contracts, and then down here up to this line for the January contracts. So you see the last one here reports January 18th prior to expiration of the January contracts. All right, let's clear that up. And now let's move down a little bit. Now, all of the securities in the white cells here are eligible, with the exception of the ones that are kind of hashed in like this, that don't have adequate option liquidity at the time of the report. So if you're using the stock just to buy as a stock and not sell the option, have at it. Or you could check periodically to see if the open interest has moved up. It could. Otherwise, I wouldn't take the chance, because you might not be getting good price executions with those. So everything in the white cells is eligible, with that caveat regarding the option liquidity. So what do? We have all these stocks. As I scroll down, you'll see it goes even further. And how do we determine which ones we're going to be including in our portfolio this particular month? Well, there's no right answer to this, because different people have different trading styles, different needs, but I will give you a popular one. But let me start off by saying we give you recent prices. So for example, you may have a portfolio totaling 50,000 available cash. Well, you're going to probably want to use stocks that have prices under $100 a share, maybe even less. So you're going to be focusing in on the ones that you see me highlighting here. Or you may have hundreds of thousands available for trading, and then you may say, you know what, I could do a company like Avco or Broadcom, AVGO. So that's one way of eliminating certain securities. Now, another thing, some people enjoy having stocks that also generate dividends. They like to get both. So you take a look and you say, well, where am I getting some dividends in addition to my call options? And then you would go to the column that showed you the dividend return rate on an annualized basis. So that's another way. One of the most popular ways of selecting securities for your portfolio is to focus in on the stocks in bold, like PayPal, for example, right here. Those are the ones that are strongest technically at the time the report was made, all bullish technical signals. We also then can further screen it by getting industries that are ranked the highest, A or B. So PayPal, for example, was a good candidate because it was in bold. It had an industry rank of A, and the previous week was also A. When you see a slash and another letter, that means the most recent week was A, and last week it was also A. So that's showing strength as well. It's showing that on the IBD 50, it was ranked 15th of all the stocks that IBD screens. Thousands of stocks, it was ranked number 15. It was in the finance industry. You don't want to duplicate too much of that. It had a risk reward of 8, very strong. And then, of course, the technicals were all very good. You could see here in this column, there is no dividend. For me, I don't care about that, but for some people, you might. And it's actually been on our list now for 13 weeks. So the time I'm making this report, for over 4 months, PayPal was right in there showing a lot of strength. So a lot of people like to use the bold with the high industry rank of A or B. Make sure that you allocate to different industries. You don't want to have all, let's say, stocks in the building industry. You know, that could hurt you, because if the building industry tanks, then your whole portfolio is impacted. Whereas if you are diversified, you know, the others can pick up if the building industry falls down. So look at the name of the industry and make sure that you don't have too much duplication there. Look at the price, make sure it's appropriate for your particular portfolio. So really, all of the information is right at your hands over here. And so you could use these reports to select at the beginning of the month and then manage your positions from there. The reason that we do weekly reports is if you have to close a position mid-contract, then you can actually select a replacement stock with the most up-to-date information. And just remember now, we also give ex-dividend dates for those of you who do not want your shares sold early, and the most likely time for that to happen for dividend-bearing stock is the day prior to the ex-date. So we give that ex-date information on that very last column on the right side. Now, screening down even further, we could see more eligible stocks in the white cells with that same information. And then eventually that will bring us to these pink cells. So what are these pink cells? Well, you could see here the stocks that passed the previous weeks but failed in the current week. The most likely reason for stock to fail in the current week is for technical reasons. So maybe the MACD or the stochastic oscillators were both bearish. Maybe the actual exponential moving averages showed that the stock was dipping below the 20-day EMA. This material is all in my books and DVDs. So we show you why it got bumped, and usually it's for technical reasons, because fundamental reasons only change usually after an earnings report. We leave these stocks because, as you know, stock prices whipsaw up and down, and so do the technical indicators. So we leave them actually in the pink area here for 3 weeks. If it's still in the pink area after 3 weeks, it gets bumped completely from our reports and will have to earn its way back on. But we do rescreen these, even the ones bumped, every single week. We have a database that we have developed over the last 12 years of over 3,000 stocks that were eligible at one time for option selling. We rescreen those along with the IBD 50 and other resources. So we make sure that we find the best of the best for all of our members regarding eligible securities for option selling. So again, pink cells, if you purchased the stock the previous week and it was in the pink cells the next week, that doesn't mean you sell it. You manage it the way described in my books and DVDs. But if you sold a stock and you were looking for a replacement stock, then you're going to replace it with a stock from the white cells above these pink cells. Okay, so let's now move down a little bit, and you see more stocks in the pink cells. And finally, we get to another page here where we list the stocks on a weekly basis from the current contract, the current November contract. So you see the last week of the October contracts is shown here, and then of the November contracts, week 1, week 2, week 3, and here we go for the contract which was reported from 11/17 when market closed on that Friday. So you kind of can take a look and see the progress of certain stocks. Now, you may have bought Adobe here that was in bold, meaning very strong technically, a good likely candidate here. What happened the next week? Well, it remained a bold stock. Week after that, it remained a bold stock. Week after that, it went from bold to non-bold. Still eligible, still a very, very strong security. But what that means is some of the technical indicators started to become a little bearish. You might have a positive MACD and a negative stochastic oscillator, with still the chart pattern being bullish. So what happened the current week? Well, again, it was still there. It was still up there, but again, not in bold. So we kind of keep an eye on it, but it could easily turn to bold the following week, and it's no reason to sell the stock. It's just a little bit of a red flag that we want to keep an eye on it, because the last 2 weeks, the technicals were not quite as strong as they were the previous 3 weeks, but still very much an eligible stock, a real elite performer from a lot of different perspectives, fundamental, technical, and common sense. So you kind of get a snapshot of what's been going on the entire contract month, starting the last week in the previous contract. And then scrolling down, you see some more stocks, same idea. And that will then bring us to this page over here, which was added in when a lot of our members wanted to copy and paste the entire list of eligible securities. So we created the next couple of pages for those members that want to copy and paste it to their own spreadsheets. So this is the page you come to now. And what you can do is you could just take these symbols and you could see that the ones that were the strongest from a technical perspective, we still have highlighted for you in bold over here. Okay, and if they have earnings in the current month, you see that yellow highlight over here. Okay, that's in the key. All right, and so this can be copy and pasted to whatever spreadsheet. You know, we have a lot of members that like to do their own spreadsheets, and so this will be helpful in that regard. And there we go all the way down to the bottom. Now, lo and behold, after that, we're not done. We see that we have weekly stock screen and watch list from 11/17. That kind of sounds familiar. And we see here the report date is 11/17, expiring 12/17. That still sounds pretty familiar. Well, what we have here is we have the same report in larger font for our members who are visually challenged. So you're going to notice that it's the same report, but in larger font and more pages. So remember that page 1 of the report had market tone and these charts on 1 page. Now it's 2. Same thing, scroll down. You remember the key was on 1 page. Now it's on 2. And so on and so forth. Here's the very same exact report in larger font. So whichever works best for you, feel free. But scrolling all the way down to the bottom, it's the same report as we started out with. Let's go all the way back to the top now. Here we go. Let's clear that. And so that pretty much does it. Now, I have learned my lesson that over the years, I could never say that this is the way the report is going to be forever and ever, because we're so fortunate to have members that give feedback and say to us, why don't you include such and such, or why don't you include these statistics? And of course, we have a real estate problem here because we have so much information packed onto these spreadsheets that it's hard to find room. But usually when somebody asks for something, we'll figure it out. Or I can't take credit for that, but I have a team led by Barry that can figure it out. So we discuss it as a team. We say, well, we have a lot of members that are asking for such and such, and we do our best to include that information into our reports. Now, regarding the stock selection and the option selection and position management skills, as you know, you must have those before you should risk even 1 penny of your hard-earned money. But regarding the actual screening for eligible securities, we have done all the legwork for you. All the information is right here. It's going to save a huge amount of time, and I can't tell you how much time my team puts into creating these incredible reports. I am so fortunate to have a team capable of creating these reports with that amount of information and provide it to our premium members. So there you have it. If you have any questions, shoot me an email, Alan, A-L-A-N, at thebluecollarinvestor.com, or Barry, B-A-R-R-Y, at thebluecollarinvestor.com, and we'll get back to you. Thanks for taking the time to watch this video. This is Alan Ellman, the Blue Collar Investor. Take care, everybody.